of the day, Unlocking Climate Finance, Innovative Pathways for Transition and Resilience. This panel will explore how climate finance is evolving beyond traditional models to harness catalytic capital and blended finance for real-world delivery. Now, while the scale of needs is clear, the pressing challenge is how to innovate and deliver at speed with trillions required annually to meet global climate goals. Now, speakers will highlight emerging financial solutions from sustainability-linked loans and sovereign real green bonds to debt for climate swaps, orange bonds, and other new instruments, and how these can be deployed in the GCC and MENA region. The session will also examine how both transition finance and adaptation finance can be mobilized to accelerate decarbonization, strengthen resilience, and underpin economic growth and job creation, especially in youthful Middle Eastern economy. So without any further ado, please join me in welcoming on stage our panelists, Ms. Lina Osman, Managing Director and Head, Sustainable Finance, Middle East and Africa and Pakistan Standard Chartered Bank, Catherine Garrett-Cox, CEO of Gulf International Bank UK, Ms. Zaina Zayani, Group Chief Strategy and Sustainability Officer, National Bank of Bahrain, and this will be moderated by Ms. Jessica Robinson, Partner Solve Strategies. Ladies, welcome.
Okay. Oh, gosh, yeah, it is. Welcome then to this panel, Unlocking Climate Finance. And I have to say, after 20 plus years of working in climate finance, this is possibly the first time I've had an entire female panel specifically talking about finance. So I'm very excited. And also, in that vein, we're going to be highly efficient and catch up with some time because I know people will be wanting to go for lunch soon enough. I think we're at a moment of contradiction. I think, the headlines sometimes are suggesting that climate finance is retreating. Yet at the same time, we see, particularly here in this region on the ground, an acceleration, but also an experimentation and some real structural innovation across the region. We've had early tools with green bonds, sustainability-linked loans, ESG frameworks, and a lot of these have reached a level of maturity. And that's been great progress, but I do think, and this is probably a recognition we all have, that incrementalism is probably not enough. And I think we're now moving into the phase where we talk a lot around catalytic structures. And I think that's what we're going to talk on. We're going to focus on that today. What comes next? So how do we crowd in the private capital? How do we make adaptation investable? And how do we build that pipeline such that investors are really willing to scale that capital? Now, I sometimes do things a bit differently because I like my panelists to introduce themselves because I think they probably do the best job at that. I'm going to ask each of you just to briefly introduce yourself and your organization. And at the same time, just talk about from where you sit, from your perspective. When we refer to unlocking climate finance, what does that represent? And how do you think that's changed in the last couple of years? Lina, I'm going to move to you first. And remember, efficiency is the name of the game.
I'm going to try. Hello, everyone. First of all, really great to be back here in Bahrain for this event. Definitely one of my top most favorite events in terms of the quality of the topics and what we're discussing, the relevance as well. Really important in terms of what's happening not just in Bahrain but in the region, and it's a great also excuse to kind of reunite with a lot of familiar faces and a lot of friends. I run sustainable finance for the Middle East, Africa, and Pakistan at Standard Chartered Bank, and we are a bank that has very strong roots in Bahrain, but also in the region. Sustainable finance is a key kind of strategic pillar for us in terms of how we run our business, and really important in terms of how we look at identifying innovative structures for catering to the different sectors and the different challenges that are being faced by the different markets that we cover. In terms of kind of just reflecting back, I think, I got into this about 4.5, 5 years ago, and it was a very different market. It was, we were still talking about green bonds. We were still kind of educating clients about what they can do from that perspective, and on bonds, on loans. And you had the kind of the different structures of green, social, sustainable loans and bonds. I think it's been a great evolution, and it kind of personally as well was a fantastic learning development as how I saw that not just the market mature, but also how my understanding and our team's understanding of the maturity level was a reflection of what we're seeing. And a lot of the way, most of the ways that we've been thinking about things now is, where does sustainable finance create value, or create a true business proposition that aligns with what Treasury in the different kind of client centers would benefit from? Be it, better access to investors, cheaper cost of funding if possible, but also the different type of solutions that you could put in place around combining, capital that is available in different pockets of liquidity with the needs of a particular client. A big factor over the last 2 to 3 years has also been how we support our clients beyond just the kind of the financing and advisory angle, but going into actually helping them with setting up the internal governance structures, the internal frameworks, and looking at the best practices and reflecting on the best practices we see around the world, while, very importantly, keeping in mind the local and regional nuances and the needs of the market, and aligning with the national objectives of the countries, which, as we've heard this morning, very much aligned with each other in terms of what they're trying to do. So I'll take a pause there. I know there's a lot to unlock, but
and I know
we can go into
some great examples on outcome bonds and things and the like. Catherine, over to you.
Thanks, Jess. That's working. Excellent. My name is Catherine. I work for GIB in the UK, but I'm very proud of the fact that I'm part of Gulf International Bank, who is celebrating 50 years of having been in Bahrain this year. My background is almost entirely, for the last 36 plus years, in finance, asset management, and banking. And really, for the last 20 years, I've been working in sustainable finance. With an incredible team, many of whom are represented here today, we've really been supporting GIB on our journey to help the key question that we want to debate here today, which is, how do we unlock climate finance? And I think the way that I would respond to your question, Jess, is perhaps in 3 ways. And some of this, actually, we've heard through some of the eloquent speakers already today. I think one of the first key challenges has been how we identify bankable projects. And perhaps we're going to get into it, but I think, there's the significant difference between what's been happening in the mitigation side and adaptation. We heard just earlier that the reality is adaptation is attracting much less capital. So how do we play a role as a bank in the region with proud roots across the GCC in helping both create and bring to our clients' attention these bankable projects? I think the second key area is around how we ensure that climate risk is fully embedded into all financial decisions. So certainly, 20 years ago, this was a bit of a non-topic. Increasingly, it's embedded, but I see so much more now being discussed at credit committees, because the reality is that climate risk is alive, and it's not that it's just being driven by regulation and policymakers, but we have to embed it fully across all decisions that we're taking. And then perhaps very lastly, my observation is that we should be aiming for excellence, not perfection. Why do I say that? Because I think that we've obviously been building up much better data points across this space over the past few years. But sometimes we just get paranoid about having it all perfect, and it just won't be. So at the end of the day, banks like ours, very much as Lena was suggesting in terms of how we're supporting our clients, I think the key message from my side is, let's start where our clients are today and support them on their journey to unlock finance, not start from where we want them to be. So I think we just need to ground this in reality.
Thank you, Catherine. I think the point you made around the credit committee as well and how it's now tabled as an agenda item is really important. Zaina, over to you now.
Hi, so my name is Zaina Zayani and I'm the Group Strategy and Sustainability Officer at the National Bank of Bahrain. When we look at unlocking climate finance at NBB, this increasingly means moving from commitment to execution. So creating real pathways that help corporates, SMEs, governments, and GREs to transition in a way that is economically feasible and locally relevant. So 2 years ago, the conversation was in Bahrain and in the Middle East was a bit different. So we were looking more at awareness and small pilot initiatives. But today, we are seeing or being asked for more practical financing solutions for climate change financing, sector-specific transition financing, sustainable linked instruments, and as Jessica added, in terms of products that reward incremental performance improvements and not rather than perfection. So for us, unlocking also means enabling the infrastructure. So the shift has been from why to the how now. And as a national bank, we see our role as helping create investable projects that are credible, that have credible transition plans, and that can attract capital to Bahrain's economy and the region.
Thank you. Lena, I'm going to come to you because I do want to be focused on this innovation theme, because you and I have probably spoken on how many panels before in the past around green bonds, about those kind of structures. But I think what we are seeing is there is much more innovation coming forward. And I know that Standard Chartered has been doing some really interesting stuff. Perhaps you could just talk us through some of those newer, more innovative structures and to what extent you see these being blueprints as we go forward.
Look, there are several things that we have actually tested out over the last year, 2 years in terms of what we can do. So obviously the usual things around bonds and loans and even kind of supply chain finance and how we help clients unlock their the capabilities or the ability of the ability that they have to help their suppliers who are even lower credit standing, how they help them to decarbonize in order to kind of decarbonize their businesses. So there's all of these are things that are still very much happening, and there are elements of creativity through the variability that we introduce based on the client's situation, sector, what they're trying to achieve, etc. Now, if we were to look at some of the interesting things, I think we've done some really interesting things in the carbon markets last year, for example, where we managed to provide financing through a clean cooking outcome bond, where we had a blended finance solution with IBRD to help a project developer meaning a client that was looking to, through its business, produce carbon credits and therefore sell those on the back of an offtake agreement to a buyer, and therefore we put it's a public transaction, so feel free to reach out to me if you're looking for a case study or an understanding of how it looks like. But this is an example where you are trying to unlock financing for a very difficult, very unpredictable and very volatile market, which is the carbon markets. The other aspect is, another example of something that we've been doing is unlocking the debt for nature swaps. The really interesting things about debt for nature swaps, we've done a couple of deals last year, but the really interesting thing about debt for nature swaps is that you can replicate that for debt for anything swaps, right? It could be debt for food security swaps. It could be debt for social. It could be for, furthering women-led enterprises. And obviously, sky is the limit in terms of what can be done when it comes to these things. So, using those kind of structures, and that's the element of variability that we introduced based on the customized solution. A really interesting thing that we have done is that we have kind of tried to go beyond that to work with governments as well on putting in place country platforms. A really interesting currently situation that I've been involved in with the bank is working with an African government on creating a country platform that actually helps them with looking at how they can, one, bring in investors, and that's where our role as a financier, as a bank, comes in terms of connecting the dots. At Standard Chartered, we take pride in the fact that we look at ourselves as not just connectors, but actually super connector. This super connector bank that puts in place solutions for clients across the globe. We know those markets, we know those clients really well, inside out. So how do we connect the dots by bringing in investors into that platform that this government is trying to do, but also going beyond that to looking at how we can bring in, for example, renewable energy developers to actually run projects in that country. And then obviously we play a role in the financing and advisory piece of it. So a lot of these things are about how you go over and above. They take a lot of time, it's frustrating, but it's really satisfying when you get to the end result and you see that this is something that you can then replicate. So maybe it takes you time in the beginning, but then the next one will take much less time to do.
Can I just ask you then, that conversation with the client, does that come from you, or are you seeing it come from them more as the last sort of few months?
I think it depends. For example, things like the value proposition around a country platform,
Yeah.
I think it was something that was a little bit of a two-way street.
Yeah.
We are seeing, for example, if I look at the Bahrain perspective, we are seeing a lot of our clients in Bahrain actually reaching out to us, initiating a lot of these conversations. We've proudly worked with a lot of the banks here as well. We worked closely with Zaina and her team on how we look at things, but also, there's this inbound questions on what else can we do? How do we look at unlocking some of the maybe social aspects in Bahrain? How do we look at unlocking decarbonization? What kind of capex do we need to invest? How does that look like from a capital structure perspective that can help us then, and that is something that we provide as a one-stop solution. But it's a two-way street, it really depends, but we're seeing a lot of inbound now.
That's good. That's a good progress.
It is a reflection of the maturity and the sophistication of the market. When the market comes to you and says, okay, what's next? What else can we do? This was really great. Can we do more?
Yeah. Catherine, I'm really interested in your perspective as well, because I think you have quite a unique view. Where you're seeing sort of clients and investors, how are you seeing them think about climate-related investments? Where is it actually translating into capital deployment, even if it's described or framed differently, say transition, resilience, or adaptation?
So there's obviously been a migration over the past few years, and clearly events in the United States have sort of perhaps put a pause on some of these conversations globally. At GIB, our perspective is that this just creates a huge opportunity in terms of what this region can do in respect of filling that gap. And that's something that we're super excited about. So from an investor perspective, it's really around the framing, I think, and how we position it as just simply building resilience into your portfolios. So it's very easy to say, oh, well, ESG, that's all gone. Let's not mention the word sustainability because it's too controversial. I think that's extremely short term. And you only have to, open a newspaper article to see that climate events globally, they're alive, right? Have you seen New York is just buried under snow at the moment? That's an extreme weather event. So climate change is happening. And from an investor's perspective, we're really looking at what does that mean in terms of how you can support communities of investors actually generate proper returns. And I think that then comes back to the points that we've just been discussing about how do you build the right sort of structures? How do you have the right conversations with people? And certainly from at least sort of our lens on this is there's a huge amount of work that can be done here because of the drive towards a more renewable society. We talked about all of these innovations. We've talked about green bonds and the evolution of those. The reality, though, is that the market is still maturing. It's still quite hard to build very diversified portfolios. everyone's getting excited now. You talked about debt for nature swaps. So biodiversity, blue bonds, I mean, that's a huge opportunity, I think, particularly in this region, particularly in Bahrain, given that you're surrounded by sea. There's a lot that you could be doing here to actually drive innovation. But it's also more than that. I mean, what can you do around pushing the envelope? And we talked about the evolution of purple bonds, orange bonds, some of these things that are so nascent. But I think for the brave investors who want to build that resilience into the portfolios, I think there is a role that banks can play in both creating structures, about providing those pathways, and also holding people to account around ensuring that we have the right data. Because at the heart of it, investors, they're not going to make decisions on flaky data. And the data quality piece is getting better, but it's certainly not perfect.
Yeah, and I think the point you make about the role of this region in terms of leadership as well. And so Zaina, to you, what do you see in terms of this region, the GCC, and the Middle East more broadly? What kind of innovative products and approaches are you seeing that we may be able to apply or could actually offer different pathways to the market?
See, stepping back, we should look at three main realities that are shaping innovation in the GCC and Middle Eastern market in general. So the first one is that we are energy-intensive economies. All the investments are mainly government-led and a young private sector ecosystems. So these dynamics are creating a pathway to different innovation in the Middle East. What we see in terms of innovation is that transition-focused instruments are becoming more common rather than pure green projects. So this includes sustainability-linked loans, as my colleagues have mentioned, with KPIs designed around energy efficiency, methane reduction, water optimization. Things are more relevant to our local corporates and GCC environment. Secondly, sovereign-led market creation. So we've seen in Saudi Arabia and UAE, they're becoming hallmark in the region for issuance of green bonds. And these have set benchmarks to help banks build complementary products to offer to their corporates. That includes, examples are a UAE green bond. Masdar has also issued a green bond. PIF has also recently issued a green bond. Thirdly, we see regionalization of taxonomies and sector guidelines. So we've seen Bahrain issuing its ESG reporting framework. UAE has also been issuing their ESG reporting framework, which is shaping the environment and creating guidelines that are unique to the environment rather than adopting European models. And finally, there's growing interest in nature-positive finance. So especially like coastal resilience and mangrove restoration, there's also an increasing interest now in seagrass plantation, which is unique to our geography. And we see that these will become investable themes in the near future for the region.
Thank you. And we've had a very positive discussion so far, and it sounds like the market is moving. It sounds like there are a lot of options, a lot of innovation. But Lena, let's come back to the outcome-based bonds. As you're putting these structures together, what are the real challenges that you're finding? Because there is complexity in this, right? So we can't sort of ignore that complexity. Can you share some of those experiences?
Yeah, it can really be frustrating sometimes, and you sometimes sit there and you question your existence trying to get these things over the line because it just takes a lot of, it's not just about kind of connecting the dots. So for example, it's about knowing your clients and knowing also where those pockets of liquidity are available. But then if you look at something like this outcome bond, you had to kind of do things the way that the IBRD wanted, but also the client had something else, but then the off-taker had something else. But I can do this, but I can't do that, right? So putting those structures in place, you kind of really need to have very long breath to sit through it. So these are some of the challenges. It's not a standardized market. It's a market that needs a lot of that kind of customization, but which you can, it's all about also finding that sweet spot where it's customized enough, but it's also replicable. And I think those are some of the challenges that we see. Some of the other challenges we see is sometimes the volatility in the market. Obviously, the geopolitical issues and what takes precedence in terms of priority for what we need to look at, whether it's energy security, or it's food security, etc. So in order for you to kind of align with all of these objectives and kind of compete a little bit with the priorities, is sometimes also a challenge when it comes to it. If we look at the papers, we see a lot of kind of doom and gloom. But I think from where we're sitting, and also speaking to our colleagues in other banks as well, we are actually seeing a growth in the market. We're seeing we're seeing that the market has become more mature, first of all, and that's normal, right? There's this kind of nice shiny thing called sustainability that's come out and is really taking the world's center stage in terms of what can be done, and everyone wants to be part of it, wants to get involved, wants to do something. For the right or the wrong reasons. I mean, there are no wrong reasons, but sometimes it is merely for PR reasons, right? We have evolved way, way beyond that, and I think it's great because it means now we can focus on the value creation aspect of sustainability rather than it is something that is, we're doing it as a CSR or because it's good for the environment. It is good for the environment. We have to be doing it. I'm not going to challenge that point. It's just about how do we use this to be a business opportunity rather than just thinking about it as something that I have to do because my regulator is asking me, rather than because it's my stakeholders who are asking me to do it. So I think those are sometimes the challenges where we kind of have to find that business angle to it that makes sense for our clients in order to further that. But I do think that the market has now come to a level where it's kind of mature enough to see that aspect, because in a good way, the other things have become, as in being part of taking care of the environment, has just become instinct. It's natural for us now, rather than thinking about it and saying we need to implement policies and strategies around it. So different things depending on the situation, but it's mostly the challenge of getting something across the line because you're aligning objectives.
Yeah, and I think I would echo that. I've seen something similar across financial institutions in this region, and you just see it when it shifts from the CSR discussion to the commercial business discussion. But like you, it's taken a lot of patience to get there, I think. Catherine, I just want to stay on the challenges piece because I would be interested in your perspective in that. You mentioned before data, but what else do you see? I mean, obviously climate risk, as we've said, is now on the risk committee discussion. But where else are you seeing sort of the challenges that we need to overcome?
Well, I think Lena's just highlighted one of the challenges, which is sometimes it's seen as a bit of a PR exercise. And I think that sort of educational gap is sometimes quite profound. But I think at the end of the day, we're all sitting in finance, but we're not just sitting in finance for finance sake. I think what we're trying to do is to create impact in the world. I mean, certainly that's how I show up. I think there's a real necessity to mobilize capital to where it's needed most. And so I think one of the challenges that corporates need to really think about is, particularly in family-owned businesses and private companies, what will give your business a license to operate on a longer-term perspective? And are you really thinking about that? Because it's very easy to become short-term, short-sighted in your sort of mindset. I mean, everyone loves to write a business plan and they update it every 3 years and they bring another consultant in and, let's just refresh that. But the reality is, do you have a license to operate? And what are you going to do about it? So I think that, there is a narrative point. I think one of the other challenges is, I think we've got better at this, is how do you measure success? We're an industry that sets KPIs and loves to hold ourselves to account against it. But what are we actually doing beyond that? So I think there's a mindset piece, there's a data piece, there's a avoiding the greenwashing piece, and most importantly, are we supporting our clients in helping them think beyond the horizon, beyond the next 2 to 3 years, because if they don't exist, then we're not going to have a business either.
Yeah.
It's mutually beneficial.
Yeah, and I think that point about KPIs, I think somebody made it on an earlier panel about the importance of giving individuals and senior management KPIs tied to this. Now, I promised Leila and Zara that I would be super efficient, so I'm watching the clock. Just going to the audience, are there any questions? And if are there any quick questions you might like to ask the panelists? Please do put your hand up. No? I know everyone's hungry. In which case, Zainab, I'm going to turn to you very quickly just to ask you, because I know when we were talking last week, we were talking about the decarbonisation targets that you're working with your clients. Can you just give us a bit of flavour and detail around that?
So for our own decarbonisation plan, we are in final stages of completing our decarb plan, but that would also entail working with our clients and to achieve our scope 3 emission targets in the long term. The biggest practical challenge in that is data, particularly in an economy where it is dominated by the SME sector. The big corporates are there, they are aligned with the disclosure requirements and the governance, but the SMEs, I feel that it is the bank's duty to handhold them and walk them through this journey. And starting from simplifying the starting point, which is measurement. So most SMEs do not have the resources for comprehensive carbon accounting. What banks can do is support them with simplified templates or partnership with local consultancies to provide that measurement, like basic measurement tools to the SMEs in alignment with global reporting guidelines. And then from there, linking measurement to incentives. So once a client can quantify emissions, even at a basic level, we can offer sustainability-linked pricing, preferential terms for energy efficiency. So basically, we offer some incentives for them to move from just commitment or pledges to action and give them tangible benefits from committing to these disclosures. Did you have a question? Okay.
Oh.
And lastly, I feel that banks should start aligning with supervisors on a sector basis to to start building capabilities and have the data sharing. I'm very happy that Razan just shared that sector GHG emissions have been publicly available now in Bahrain, so I'm excited to go back and see the sector-wise carbon emissions per sector. Okay. So I feel it is the role of the banks to help their clients through this journey.
Yeah, no, agreed. Very, very quick. I'm watching my clock.
Are you interested to invest in real carbon calculation and benefits? What I'm saying that we're trying to promote using solar energy, okay? So if as a citizen, if I put a solar panel, okay, I can use it for electricity, and my electricity will be less. But if I can capture how much carbon I'm saving, verify it through a very international verifier, put it in the platform, and pay him for selling the carbon. This way, citizens will be not just benefiting from reduction of using it for electricity, but also they will be actually contributing to the carbon reduction, and they will know exactly how much. Now, the question, there is a big market here. Are you interested to invest in that? And we already have the platform, so we can do it.
So we like to lead by example. We already do our GHG calculations and disclose that. And we also have a full branch that is fully solar panel operated, where we do transmit, carbon credits back to the grid. So this is something that we can also basically introduce to our clients, and we can work together on deploying this to our clients as well, if they're interested.
I think.
But this is theoretical. So we're not talking about theoretical here. We're talking actual. To do actual, you need certain device that will actually tell you this is how much. And actually, it will verify it. Internationally, they will give them a certificate, this is how much. That will give more credibility than just a calculation. I know with the solar panels, they say, okay, we're reducing this much carbon. But this is theoretical, based on the calculation, which is mathematical. But here we're talking about actual thing, which will create an actual impact. And Bahrain could be leading in that direction.
By all means, we're open to explore such platforms. Thank you.
I'm going to step in because we're a client. We do need to finish shortly, and we are focused here on climate finance.
40 seconds.
I think the key point is engaging with people and getting them to buy in. I'm going to close the panel now. I just want a rapid fire, one-word answer. If you could wave a magic wand, what would be the one bottleneck or challenge that you want to solve to really scale climate finance in the next 1 to 2 years? Lena?
I would say probably the challenge that I have, which is kind of connecting the dots as to who needs what, where, and how you do certain things. So it's just kind of the connectivity and the knowledge angle of what works.
Great. I thought you were going to say more patience then. But
Yeah, we have patience, yeah.
Catherine?
You asked for one word.
One word.
Collaboration.
Collaboration. There you go. Thank you.
I'd say balancing risk and return, because it's very important for pricing climate risk into our credit assessments.
Okay, so balancing risk and return, collaboration, connectivity.
What's yours?
Patience. Thank you very much for your patience. Thank you to my panelists. What a great discussion. And I hope you enjoyed it. Thank you.